Subscribe to my channel Report Stock.
In the cutthroat arena of global e-commerce, where every single percentage point of profit is fiercely guarded. How does a company not just survive, but actually thrive when it deliberately chooses to take a hit on its own bottom line?
Yeah, it's counterintuitive, isn't it?
Totally. You always hear about companies relentlessly chasing growth, but what if a major player elects to sacrifice those immediate financial returns for, well, a long-term strategic play?
It's like watching a chess grandmaster give up a pawn, maybe, to control the center of the board. A calculated risk.
Exactly. Welcome to the Deep Dive. Today, we're not just looking at numbers. We're really dissecting a high-stakes strategy. Our subject, PDD Holdings Inc.'s Q2 2025 earnings call.
And this isn't just some dry financial report, right? It feels more like a masterclass in strategic choices.
Yeah, intense competition and a company charting a really bold, deliberate course in one of the most dynamic markets on the planet. So our mission today is to unpack the intricate insights from PDD's latest earnings call. We want to explore the powerful strategic decisions driving their financial shifts.
And help you understand what's really happening beneath the surface of those headlines.
We'll cut through the noise, highlight the most important nuggets, the key takeaways.
And give you a clear, concise picture of where PDD stands as of, well, August 25, 2025.
Let's dive in. Okay, so let's unpack this. PDD Holdings, a formidable player in the e-commerce space. They just released their Q2 2025 earnings.
Right.
And at first glance, the top-line numbers look pretty solid. Total revenue jumped by a respectable 7% year over year, hit RMB 104 billion.
Which sounds good. Growth is growth, generally.
That's what you'd think, right? But then you peel back a layer or two, and some other numbers start to tell a much more complex and frankly kind of counterintuitive story.
Yeah, this is what's truly fascinating here. While that revenue did show healthy growth, we're seeing a really significant strategic pivot. It's profoundly impacting profitability.
How so?
Well, for example, their operating profit actually decreased by 21% year over year, down to RMB 25.8 billion.
Wow, 21% down.
Yeah. And the non-GAAP operating profit margin, which, gives us a clear picture of their core business efficiency, that had dropped quite notably from 36% in the same quarter last year, all the way down to 27%.
That's a huge drop, 9 percentage points for a company this size.
It's a dramatic signal. And this isn't just some minor adjustment signaling trouble. It really reflects a full throttle strategic shift. Immediate profitability is consciously being sidelined.
Right.
Even their net income attributable to shareholders saw a slight dip, down 4% year over year to RMB 30.8 billion. I mean, this kind of aggressive reprioritization can be unnerving for investors focused on immediate returns.
Sure.
It just highlights how committed PDD is to this long-term play, even if it means weathering some significant scrutiny.
That's a really profound move. So when we see numbers like that, revenue up, but profit down significantly, what's the immediate conclusion someone might jump to? And how does PDD's own statement kind of reframe that for us?
Well, the natural conclusion for many might be, a market slowdown, maybe increased operational inefficiencies. Something's wrong.
Right, something's broken.
But PDD Holdings is actively choosing a different path. Their co-CEO, Jiazhen Zhao, explicitly stated, and this is key, they are increasing investments and accepting lower profits to create growth opportunities.
So it's deliberate.
Exactly. It's not a reaction to a problem. It's a proactive, deliberate, long-term play.
Yeah.
They're aiming for market dominance and sustainable, high-quality growth. They're essentially saying, we see bigger opportunities ahead, and we're willing to pay for them now.
That makes a lot of sense. And it leads us directly to one of their flagship initiatives that really caught my eye in the earnings call, this 100 billion core program. What is the strategic intent behind such a massive investment? I mean, 100 billion is a huge number. How's it designed to reshape PDD's operations?
Well, the 100 billion core program is, like its name suggests, a monumental resource investment. It's specifically aimed at supporting their merchant ecosystem.
The sellers, right, not just the buyers.
Exactly, supporting the sellers and exploring entirely new business models for them. Think of it less as tactical marketing spend.
Okay.
And more as strengthening the platform from the ground up, fundamentally altering the infrastructure for their sellers. And here's the interesting insight, I think. Many e-commerce giants focus heavily on, say, consumer acquisition or maybe optimizing supply chain logistics, which PD does too, but
But this is different.
This is different. By pouring such a monumental sum into its merchant ecosystem, basically empowering its sellers, exploring new business models for them, PDD is making a profound bet. They're investing in building a more resilient, kind of self-sustaining community, almost like cultivating a proprietary garden of innovation, you know, that could lead to unique product offerings or fulfillment models down the line.
Things competitors can't just replicate easily.
Exactly. Things competitors can't replicate just by throwing marketing dollars at consumers. Now, management confirms this program has indeed led to that slower revenue growth and the decline in profit we just discussed.
Right, they admit the connection.
They do, but they view it as a necessary commitment for future resilience and expansion.
That's a fascinating distinction. So it's not just about spending, but where they're spending. But how do we quantify this strengthening from the ground up? Are there specific metrics beyond just revenue growth that show if this program's working? Or is it more qualitative, like merchant loyalty?
Well, we are seeing some tangible results already. For instance, their logistics support initiative, which is a direct output of this investment, it's led to a really remarkable 40% growth in order numbers coming from remote regions.
40%?
Huh?
From remote areas?
Yeah, and this isn't just about getting more packages delivered. It's about reducing shipping costs for both consumers and merchants in those areas.
Okay.
And crucially, it injects new energy, new economic activity into often underserved economies.
So it expands their reach.
Right. Expands PDD's reach and their merchant base into areas where traditional e-commerce might struggle. It builds long-term goodwill and market penetration.
While those results sound promising, I mean,
Yeah.
especially that 40% growth in remote regions, does expanding into these underserved areas introduce new layers of logistical complexity? Or maybe cost challenges that could eventually erode the very margins PDD is trying to, ultimately build back up?
That's an excellent point, and it's certainly a tightrope walk, no doubt about it.
Mm.
But PDD is also tackling consumer engagement head-on. Another key investment is their expanded consumer give-back program.
The coupons.
Yeah, includes the 10 billion coupon program. And this initiative directly drove record sales during that crucial June 18 shopping festival.
So a clear, immediate impact there.
Definitely. Shows a clear impact on consumer engagement and demand. And beyond that, they're continually investing in agritech.
Agritech, like farming tech.
Exactly. Showcasing cutting-edge technology in AI farming, hydroponics, through things like their smart agriculture competition. Now, this isn't just PR.
Okay.
It demonstrates a real commitment to integrating innovation into their supply chain, which can yield long-term efficiencies, higher quality products.
Interesting.
So all these investments, they really underscore this commitment to long-term value creation, prioritizing high-quality growth over those immediate short-term gains, even if it squeezes current profits.
It sounds like a really comprehensive strategy to build future resilience. But, while these investments sound promising for the long haul, they definitely come with a hefty price tag.
Oh, absolutely.
The earnings call highlighted some negative points, as they put it. What are the immediate challenges PDD is facing because of this strategy, or maybe even just alongside it?
Well, the most significant challenge they're facing is just the intensified competition across the e-commerce industry. It's fierce.
Right. It's not just the usual suspects anymore.
Exactly. We're not just talking about traditional rivals like Alibaba and JD.com. There's a fierce new front from content-driven platforms like Douyin e-commerce, Kuaishou.
The TikTok equivalent.
Yeah. Basically, they're blurring the lines between entertainment and shopping. And this dynamic means PDD isn't just competing on price or product selection anymore.
They're competing for attention.
Exactly. For consumer attention and engagement on entirely new fronts. Honestly, the e-commerce landscape in China feels less like a market and more like a constantly shifting battlefield where today's innovative tactic becomes tomorrow's table stakes. So this directly impacts their growth trajectory and necessitates these higher investments just to stay competitive, let alone expand.
And those increased costs are very real, right? Hitting the balance sheet hard. The total cost of revenue surged by a hefty 36% from Q2 2024, reaching RMB 45.9 billion.
Huge jump.
It's a huge jump. What specifically is driving that kind of increase, especially for a company that was kind of known for its lean operations?
Yeah, well, this substantial increase is attributed to several key factors. Higher fulfillment fees, for one. That naturally rises, especially with PDD's aggressive expansion into those remote, often less efficient logistics regions you mentioned.
Right, those 40% growth areas.
Exactly. And for a platform processing a massive volume of often smaller, lower value orders, these per unit fulfillment costs can add up really quickly.
Okay.
We also see rising bandwidth and server costs, absolutely crucial for maintaining a robust, fast-acting platform that thrives on rapid, high-volume transactions.
Sure. And scaling globally adds to that.
Absolutely. Exacerbated as they scale global operations. And, of course, increased payment processing fees, which are basically a direct tax on their booming transaction volume.
So for a company built on maybe razor-thin margins and aggressive pricing.
Right. Any upward pressure on these foundational costs presents a significant challenge to their core economic model. And we also saw a significant decrease in net cash generated from operating activities,
How much?
down from RMB 43.8 billion to RMB 21.6 billion in the same quarter last year.
Wow, halved, basically.
Pretty much, which further indicates the financial pressure from these ongoing large-scale investments. And it's worth noting, Guru Focus also detected 2 warning signs with PDD, specifically highlighting these current financial pressures.
So it's not just about spending more on new initiatives, but also facing external pressures and just the cost of scaling up core operations, all of which are eating into their margins.
Yeah, it paints a vivid picture of the sheer cost of doing business and expanding in this environment today.
Okay, so given these significant investments, these competitive challenges, what is management's strategic outlook? How do they plan to navigate this incredibly dynamic environment? How do they assure investors this is the right path?
Well, Jiazhen Zhao, the co-CEO, really emphasized a proactive and long-term approach. The core of it, again, is focusing on strengthening their platform ecosystem.
Back to the ecosystem.
Exactly. It ties back to that 100 billion core program. This includes taking on the responsibility, as they put it, of driving sustainable growth and high-quality development for their vast network of SME merchants, small and medium-sized enterprises.
Right.
They clearly believe this sustained investment in their merchant base isn't just beneficial, but absolutely crucial for their future competitive advantage. And, to cultivate enduring loyalty in a market where merchants have many platform choices.
What about their global ambitions? It feels like every major tech company is looking beyond its home borders these days.
Yeah.
Lei Jin, the chairman and other co-CEO, he shed some light on PDD's approach there. Are they going full steam ahead, or is it more measured?
Lai Chen noted that PDD's global business is still in its early stages, which suggests, a cautious but determined expansion, prioritizing foundational strength over maybe rapid market grabs.
Building blocks first.
Right. He emphasized adapting to regional changes, meeting local regulatory requirements, always with a strong focus on building consumer trust.
Okay.
Their strategy involves continuous investment in supply chain capabilities, service capabilities, compliance, really strengthening those global fundamentals. It's about building a robust, localized foundation before accelerating.
Rather than launching everywhere at once and fixing problems later.
Exactly, which is a very different approach from some rapid-fire global expansions we've seen from other players sometimes.
The grocery business also came up.
Yep.
That often requires massive investment, intricate logistics. We've even seen competitors exit some markets in this sector because it's so challenging.
Yeah, it's notoriously tough.
So what's PDD's stance there? Are they doubling down or maybe pulling back, seeing the difficulties others have faced?
Well, Jiazhen Zhao views the total grocery business as a natural extension of their existing e-commerce operations, not some separate venture to be cautious about.
So core to their business.
Core. He acknowledged it requires significant long-term investments, clearly signaling their commitment. They've already established what they describe as an efficient agricultural product distribution network.
Which plays to their strengths, right? Connecting farms and consumers.
Exactly. That's a key asset, given their strong roots there. They plan to continue to invest in product supply, service quality, delivery efficiency, creating tangible benefits for both consumers and supply chain participants.
Yeah.
So no pulling back there. It's seen as integral.
Integral to their ecosystem and a crucial area for future growth and maybe competitive differentiation.
Precisely.
And finally, just regarding overall consumer demand, broader macro trends. What do they observe in the quarter? What are they expecting for the rest of the year? Is the market robust enough to sort of absorb all these investments?
They mentioned seeing steady growth in retail sales and online retail penetration, which they attribute partly to pro-consumption policies in the region.
So that's positive. Healthy underlying market.
It is. However, they reiterated that competition is escalating, which necessitates continued increased investments just to maintain a proactive role.
So even with a healthy market, they can't afford to slow down the spending.
Seems not. But importantly, they mention positive feedback from both consumers and merchants during that big June 18 shopping festival.
Okay, so signs it's resonating.
Exactly. It suggests that their current investment strategy is resonating, building goodwill, despite that short-term hit to profits. It's a sign that their long-term bets might be beginning to gain traction with their core users.
This deep dive really reveals a company at a fascinating crossroads. They're growing their revenue, but actively choosing to let their profits dip. And it's not necessarily due to market weakness or operational failure, but by a deliberate strategic choice.
Precisely. PDD Holdings is making a calculated, strategic decision. They are prioritizing the long-term health of its ecosystem and high-quality, sustainable growth over immediate profitability.
Right.
They are pouring substantial resources into merchant support, logistics infrastructure, consumer incentives, global expansion, all to fortify their position in this increasingly competitive and dynamic market.
So this proactive investment strategy, while it's impacting current financials,
Yeah, it hurts now.
is specifically intended to lay a stronger, more resilient foundation for the future. You're basically witnessing a company betting big on its long-term vision.
Absolutely. Even if it means some short-term financial discomfort and definitely increased scrutiny from the market.
So what does it truly signify when a major company like PDD actively chooses to depress its own profits for future gains?
I think this deep dive really highlights how intricate corporate strategy can be, especially in a sector as fast-moving and, frankly, brutal as e-commerce.
Yeah.
PDD's Q2 2025 earnings are a clear testament to that tension, between aggressive foundational investment for long-term market share and the immediate financial health of a company. It's a bold play.
Requires real conviction.
It really does. Demands not just a clear vision, but also strong conviction from its leadership. And this leaves you with an interesting question, doesn't it? In today's fast-paced digital economy, is it smarter to focus relentlessly on immediate returns, appease those short-term investors, or to play the long game, even if it means weathering significant short-term pain and a dip in current profits?
How do you weigh that? Rapid growth versus deep, sustainable profitability when you're building for a truly future-proof enterprise? Something to think about.
Subscribe to my channel Report Stock.